Good day, ladies and gentlemen. I was asked a question in my comment section concerning time frames. So I decided I'm going to make this particular video. So there is this conflict about time frames, moving from one time frame to the other, trying to do your analysis. So I want to clear the air on that. Just know it for a fact that when it comes to time frames, the higher time frame have higher authority. Okay, so the authority of the higher time frames is unquestionable. You should always trade with the direction of the higher time frame. Okay, so if the higher time frame trend is downwards, try to look for sell trades. If the higher time frame trend is an uptrend, you try to look for buy trades. That's just the way it works. But there's a situation whereby you can have probably the daily time frame telling you that you are in an uptrend. Okay, but when you now go to your lower time frame, probably you go to your H4, your H4 is telling you that it's a downtrend, so it brings confusion to beginner traders. The idea behind it, if H4 is telling you that it's a downtrend while the daily time frame is telling you it's an uptrend, that downtrend you are seeing on H4 is simply a pullback. Okay, it's a pullback on the higher time frame. It does not mean that it's a long-term downtrend. It is looking like a downtrend on H4 because H4 is smaller. H4 is smaller to D1, which is daily time frame. You understand? Let me quickly show you something as a way of explaining this concept. Let me go to daily time frame. You can see on the daily time frame, the market is moving down right now. As you can see, these candles right here. As you can see these candles right here, you can see this candle and this candle, okay, showing you that the market is moving down. All right, so the market is moving down on the daily time frame. Let's look at H4. What's H4 telling us? H4 is showing us a candle moving upwards. You can see H4 is showing us that the candle is moving up, which is going to be suggesting to beginner traders to buy. Well, if you go to lower time frames, it will start looking like an uptrend. Okay, let's go to H1. Can you see? Market is moving up as if it wants to reverse. This is 1 hour time frame. But don't forget that inside a daily candle, you have 24 1 hour candles. So they are not on the same level. You understand? So the D1 has a higher authority compared to all these smaller time frames. The H4 has a higher authority compared to the H1 and the M30. So the lower you go, the bigger the picture gets. So let's go to M30. You can see it's looking like an uptrend. If you go to M15, the uptrend will start looking bigger. Can you see this M15? Let's go to M5. M5 is showing us a full-blown uptrend. So when you have a situation like this is the advice I give people. It is not good to counter trend because you don't know when the market will start moving in the direction of the higher time frame. If the higher time frame is a downtrend and these small time frames are showing you uptrend, if you enter in a counter trend position, you want to trade uptrend because the smaller one is telling you it's an uptrend, and you enter, what is going to happen is that you can make profits. But if you hold that position for a long time and you get caught when the market wants to move with respect to the higher time frame, which is downtrend, your stop loss is going to get hit. So the general rule which is given to beginner traders is don't trade counter trend, but this is the truth. Experienced traders can trade counter trend. I can trade counter trend if I want to, and nothing is going to happen. The only idea is that since the lower time frame is telling me it's an uptrend, I'll enter, but I'm not going to hold my position for too long because you don't know when the market will move in the direction of the higher time frame. Do you understand? So if the D1 is telling me it's a downtrend, H4 is telling me it's an uptrend, I can still enter that uptrend. Okay, I'll enter a buy position, but I won't hold it for too long because I know that uptrend I'm seeing is just a pullback. in case you don't know what a pullback is let's see, let me go to M30, see if I can get a pullback. Okay, so a pullback is something like this. You know, this is a downtrend now. Market comes this way, pulls back a bit, but it will still continue in the same direction. Pulls back a bit, continue in the direction, pull back a bit. So this pullback is what is looking like an uptrend in the lower time frames. So that's just the idea. Okay, if you are a beginner trader, I won't advise you to trade counter trend. So if it's if the higher time frame is telling you it's a downtrend and you see an uptrend in lower time frame, look for a spot you can enter at in order to continue moving in a downtrend. Unless you're an experienced trader, that's when you can say, okay, you want to actually trade against the higher time frame trend, and you can still be successful with that. You can still make money. Just don't hold your position for too long. Okay, I don't think there is any other way I can explain. This is the general idea behind all this higher time frame coming down to middle time frame and going down to lower time frames to look for your entries. Okay, so if you're a new viewer, please subscribe. If you have further questions, you can ask in the comment section. I'll see you in the next video. Thanks.